Good morning, everyone. Thank you all for joining us today. So many of you here, and we are excited to have you with us for what promises to be a very insightful session. Over the next hour, we'll explore a fascinating question: can AI really make investment decisions that stand up against the market? We'll look at the ideas behind this experiment, the thought process involved, and the key learning that emerge from it. Whether you're a student, an aspiring professional, or simply curious about the intersection of AI and investing, we hope you leave today's session with a fresh perspective and plenty of practical insights. To open this conversation, hand over to Sanjay Sir, founder and lead instructor at SSCI, will give us a brief and an overview of what we are hoping to learn from it. So without further delay, over to you, sir.
A very good morning to all of you. I see a lot of alumni have also joined us. And good morning, Anmol, Palak. Welcome to all of you. This is going to be a brilliant session. And the story writer, the script creator, the director, the actor, of this particular session is Shreyansh Daga, not myself. He's the one who's going to lead the session. So it remains important that the person with whom you are going to invest the next 1 hour or so, ye kaun hai? Who is Shreyansh? So let me give a short intro about him because I think the person is more important and then the theme comes in. Now Shreyansh is a friend of Vidyut Kontia. Vidyut, many of you may be knowing, is the CEO of SSCI. And Shreyansh is Vidyut's first friend. Matlab, when we go to the school, KG, nursery, in that case, the first friend you meet sitting on your bench, that is Shreyansh. Therefore, Shreyansh has been around our family since childhood, and therefore, before the discussion of capital and strategy started, he has been there, because of which trust was never an issue. It was a given. But what happened different during this time is that he developed a world-class capability in something very unique and something very difficult. We all are using GPTs and Claude and Notebook LM for X number of purposes, for decorating slides and for, creating mails and all that. But the real use case of AI is not about all this. The real use case of AI is into different fields of defense, of communications, of trading, of finance, of investing, and that's which is happening at the higher end of the spectrum is what Shreyansh has built capability in. Shreyansh is a prop trader. He does not sell courses. He does not run a subscription service ki subscribe kar lo at 10,000 per month. He does not sell tips. He's not going to tell you that this particular stock is going to do well. He applies and creates systematic quant-based investing strategies. Systematic quant-based trading is what he does. When we say systematic, it is according to a rule book. It is not subject to the judgment that a traditional discretionary manager develops when he meets management, goes through scores of financial statements, applies his wisdom and all that stuff. Systematic quant-based investing is something which is more broad-based, more scalable, faster, and it can really be something which overpowers the traditional investing. So Shreyansh does that. Shreyansh, if we talk about his past, DBS Bank, UBS, EY, Singapore, that's his expression of WorkX. He completed his bachelor's in science and with a distinction in economics from NUS, Singapore. That's his CV. But why are we over here? We are over here because my personal quant investing takes place through Shreyansh, which means my personal funds, people close to me, Shreyansh's personal funds, they all go into the quant investing, which Shreyansh does. So this is real money we are talking about. This is not theory. This is skin in the game. So for the next hour or so, you are going to see the scalability that AI has in this area and why quant investing is considered to be such a lucrative area. It was earlier believed that those who know coding and Python and all that, they are the ones who can get into it, but it's not so. The power of AI is such that if you have a good foundation, a good passion for this area, you can go by leaps and bounds. A very important thing I wanted to mention to you is that do not leave the session after the presentation, because towards the end of the session, Shreyansh and me will carry out a completely candid and unfiltered conversation on what works in quant investing? What fails? There have been big failures. So, what is it that can go wrong? And what are we betting on? Let me be very clear about the fact that all this is leading to we setting up a full fledged systematic quant based fund. Okay, that is the ultimate goal. Okay, but it doesn't happen like this. It happens with a lot of foundational stuff. So, obviously, a number of you are students who are perhaps in graduation or past graduation and always, enchanted towards the world of quants. But believe me, there's no secret formula, there's no recipe. When he applies a strategy, many a times market agrees to it, market disagrees to it, and there is a scorecard which is a reality. One has to manage the risk, one has to see the evolution of different regimes which are happening. So I don't want to speak it out myself. I think I'll call upon Shreyansh to now take over. Welcome, Shreyansh.
Hi, Sanjay. So, thank you so much for the introduction. And before I start the presentation, I'd just like to thank the SSCI team with you, Sanjay sir, because these guys have put a lot of hard work to make this happen. And I'd also like to thank everybody who's taken time out of their Sundays to attend this session, right? So, yeah, let's get started. I think before we get started, I'll just give you an overview of what we're going to be covering. Essentially, we're going to be looking at 4 to 5 things. First, I'm going to talk about what exactly is the India AI portfolio. Why am I doing it? What is the philosophy behind this portfolio? Then I'm going to walk you through how the portfolio exactly works. What happens behind the scenes on a daily, weekly, monthly basis that allows Claude to manage this portfolio. After that, I'm going to talk about certain AI tools, skills, workflows that I want you to take away from this session and apply into your AI journey. So, over here, my objective is not to tell you to build an India AI portfolio for yourself, but I want to teach you what I believe is the right, scalable, systematic way of using AI to build real applications in your personal or professional life. And lastly, I'm also going to be covering certain limitations of AI, certain problems that AI has when we try to build with it. And then we'll have a Q&A session where I'll be happy to take your questions. So let's begin. Um, I just want to put out a disclaimer once again that I am not a SEBI registered investor. So anything that in this presentation you see is not financial advice, right? And whatever we are doing is just for educational purposes, and all the other standard disclosures also apply. So before I start the presentation, I'd like Chirag to put up a poll because I just want to understand how my audience is using AI, Claude, Chat GPT today. So Chirag, if you could just do a quick poll.
Yeah.
So we'd like to keep this quick. So I'll just request all of you guys to quickly answer this so I get a good idea of my audience, and I'm going to tailor my conversation and presentation accordingly. Okay, so I'll just wait for maybe 10 more seconds. So I think what I'm understanding is that about 10% of people use AI proficiently to build live projects. So I hope that after this session, and if we ever get a chance to catch up in the future and have the same poll, this 10% becomes at least 33%, right? I think, Chirag, we have a good idea of the poll. So I'll just end the poll and we'll proceed, right? So what is the India AI portfolio? So as Sanjay sir was saying before, I'm a quant trader. So I use data to make investing decisions. So I personally do not use fundamentals, or I'm not a fundamental investor per se. That is not where my expertise lies. What I am good at is using data, building systems and processes to create trading ideas. And with the advent of AI, I thought, you know what, it might be a good opportunity for me to build a investing strategy in the fundamental space where I do not have domain expertise, but I can use AI to become the domain expert, and I can build systems, infrastructure, and process flows around it to enable AI to make decisions. So that is essentially why I started the India AI portfolio. So essentially, we have given 25 lakh rupees of pilot seed money to run a real portfolio. And when I say real, I mean the money is actually deployed. We have built a dashboard that you can see on a daily basis. You can see the exact stocks we own, the decisions we are making, and so on. We want to judge our performance over 3 years because the style of trading is long term, and 3 years is a good amount of time to get an indicative performance of whether AI can have an edge in beating the Nifty 500. And throughout this entire process, we want to keep things extremely transparent. So that brings me to the philosophy of this project, right? What are the key guiding principles based on which we want to do our work? So I've split it into two parts: the experiment philosophy, where everything I do is in public. So I'll share my social handles with you guys so you guys can have a look at each and every decision we are making, whether it is correct, whether it's wrong, the processes we are following, and so on. So the idea is not to paint a picture that AI is perfect. The idea is to essentially walk you through the ups and downs, the improvements, the things that break, so that you get an understanding of what it takes to build something valuable with AI, right? Secondly, we give equal importance to our successes and failures. And in fact, I personally like to give more importance to the failures, right? So let's say if you buy a stock and it goes down, right? This is something that I'd like to focus on. So I'll walk you through the stock selections later in the presentation, but we hold a position in Infosys that fell by about 8%. So we covered that with extreme openness, transparency, and candidness, because failure is the probably the most important part of the process, right? And lastly, for me personally, returns are important. I'm doing this to make money, but the process matters equally, right? Because AI is such a new technology, the applications can be tremendous. So throughout this entire process, I'm also focusing equally throughout this entire experiment. I'm focusing equally on the process, right? Because the idea is not only to run the India AI portfolio, but to do a lot of other things and apply the processes of using AI at scale. Now, moving on to the second part of this slide, the investment philosophy. What are the bases on which the stocks are selected? So over here, we are looking to allocate to quality stocks at reasonable valuations. And I think one thing that is very important to state over here is that each and everything that we do is documented by our artificial intelligence system. So there is an investment thesis that is essentially written up when we decide to buy a stock. We list down why exactly are we buying something, and we also list down the exit criteria. So what happens when we exit a particular stock? So it's not run on whims and fancies and discretionary decision making, right? So next up, I think this is probably the main question over here and the main reason why we're here. Can AI beat a fund manager? So over here, I'd just like to have a quick poll to get your thoughts on whether you feel if AI can have an edge over a fund manager. And then we'll proceed further. Okay, so I've the early results are that it's an equal split between the three options, and I think no is sort of leading over here. But I'll just give it another 10 seconds. Okay, so I think it's safe to say that people are split on this particular question, right? So I'll give you my 2 cents on this, right? So I've created like a spider web over here, which essentially helps us visualize where I believe AI has an edge over humans and vice versa. So let's just go clockwise. So when I talk about specialized research, and over here I feel a human, a fund manager beats the AI, is because a fund manager has the capability to call, let's say, a management of a company, to have a primary conversation, to visit factories of companies, and do specialized research that an AI just cannot do. So on this front, the fund manager definitely beats the AI. Next up is risk management. Like I was sharing previously, whenever artificial intelligence is recommending us to buy a stock, it's also telling us the exact reasons or exact conditions based on which the stock will be exited, right? So the risk management is extremely systematic in nature, and there is no bias involved. There is no emotion involved. So on this particular parameter, I feel AI beats the fund manager. Similarly, I think I've touched upon this in the risk management parameter. Execution and bias is also something where I think AI is better than a fund manager. Next up is learning agility. And by learning agility, I just mean how quickly can a particular person or a technology keep up with things that are changing. And in today's day and age, I think everybody will agree with me when I say that we do not know how the tech world or the finance world might change or the speed at which it might change in the next 6 months. But I personally believe that AI will be able to learn quicker than humans just because of the speed and scale and just the sheer amount of work it can do, right? So on this front, AI trumps the fund manager. Next up, we talk about intuition and instinct, and this is an extremely, extremely important part of trading and investing. And I feel over here, AI is extremely weak because AI at the end of the day is a technology. It's extremely new. And it's still, I personally believe, even though we have made a lot of progress, there's still a lot of work to be done on this particular front versus a fund manager with, let's say, 20, 25 years of experience who's gone through multiple cycles and made decisions, made correct decisions, wrong decisions, and learned from it. It's hands down better than the AI. And the last part is coverage and scalability. So over here, I feel AI is much better than the fund manager because, like, for in this particular experiment, AI is essentially able to scan 500 stocks and do a bunch of analysis and give me reports in, let's say, a weekend. Versus when you talk about fund managers and their scalability, an individual fund manager would probably take, if they want to go extremely in depth, would take a weekend to maybe cover two or three stocks. And I think the capacity of an individual fund manager would be maybe 20 to 25 stocks overall if they're doing it in a very in depth way. So AI is better than humans over here. So I guess the point I'm trying to drive with this slide is that there are certain things AI is better at, there are certain things humans are better at, right? But this particular chart will keep evolving over the next 3 months, 6 months, 9 months, and so on. And we might reach a point whereby AI can actually, hands down, beat a fund manager. But the jury is still out there. And so we'll see how it goes. Um, okay, so moving on, given that this segment, the question was that can AI beat a fund manager? So our portfolio has been live since 1st of June. And the live results are that we are up 5.8% versus the Nifty 500 of 2.2%. So I just wanted to put this out there just to sort of showcase how the starting has been. But yeah, 8 weeks in a 3-year experiment is next to nothing. So we should not draw any conclusions. There is still a long way to go. But this is how we have started. And later in the presentation, I'm going to also walk you through each and every stock that we own. So yeah, stick around for a bit. Next up, I think we are now getting into the meat of the presentation, and I want to walk you guys through how exactly does the portfolio work? How do we set it up? So I've made a Venn diagram. On the left, you'll see tasks that the AI owns. When I say the AI owns, I mean that AI has complete ownership of this. It runs the process end to end. On the right, you have what the human owns. So essentially, what's my role in this particular project? And in the middle, this is going to be populated later. There are certain tasks that the human and the AI do together. So let's start with AI. AI makes the investment decisions. So the process of buying a particular stock or selling it, sizing up a stock, sizing down a stock is sort of totally owned by the artificial intelligence. So I have no say in it. AI also does continuous research. So I'm going to be talking about how this happens in the coming slides. But we essentially have workflows set up on a daily, weekly, monthly basis where AI essentially looks at a bunch of different data sources to ensure that our knowledge base is up to date and we're in the best position to use data to make decisions. And automated routines is how we do it. Next up is performance tracking and risk management. So AI does this independently as well. And I think these points are quite straightforward, right? So next up, let's move to the human, right? What do? I have invested a certain amount of money. I am responsible to build the infrastructure. So the infrastructure is everything, starting from setting up the right subscriptions, understanding what the best models are out there, which models should be used for what tasks, right? And creating the systems and workflows as well. So essentially, just building an infrastructure which allows AI to do its job. I am also responsible to set up data pipelines, right? So we are going to deep dive into this later. And basically, allowing AI or connecting AI with APIs, MCPs, and other data sources so that it gets continuous clean data, and then in turn it can use that to make decisions. And the last part is governance. I am responsible overall for this project, right? So this also is from a performance perspective, from a legality perspective, and just from a sanity perspective. So ultimately, I am responsible for this project. And I think the most interesting part about this Venn diagram is this part, which is where does the AI and human collaborate, right? So the first point is investment philosophy. So in the second slide, I mentioned that we are looking at quality stocks at reasonable valuation. So that is a decision that I took along with AI after analyzing a lot of different things. And let's say the selection of Nifty 500 as a benchmark was also something that I wanted or I put forth in this experiment, because Nifty 500 as a benchmark not only offers us certain established large blue chip companies, but we also get access to certain smaller companies with a better upside. So that's something that I pushed into this particular project. Next is systems and process improvements. And we're going to again deep dive into this in the presentation in a bit. And so we do this together, right? So, and this is, I think, one very important thing that I want to communicate over here is that this project is not at a state where it is mature, right? Because the technology itself is evolving so fast from a systems, workflow, and process perspective, we are also improving as we build this out, right? So as a new technology comes, or let's say as a new model comes, like Fable was announced recently, right? Opus 5 is now here. So on a regular basis, I am working with artificial intelligence to improve our setup and processes. The next one is trade execution. So essentially, after the entire research process is done, artificial intelligence will, or Claude is essentially tells me, okay, these are the 10 stocks you need to buy. This is the weightage, and this is when you want to place the order. And ultimately, I go into my broker terminal and I place the orders. So this itself in today's day and age can be automated, but because this strategy is such a low frequency strategy that does not require me to trade even on a weekly basis, I have kept this as a task that we own together. And the last bit is social media. So I'm not sure how many of you have been on our social media platforms, but you'll see a bunch of posts we have done covering our journey over the last 2 months. So all of those posts have been generated using AI. And I obviously work with AI to tweak how the post looks, how are we putting forth the content. So this is essentially how the project's roles and responsibilities are divided. Now, I think this is probably the most important slide when it comes to the success of this project, which is data. Because data is essentially, this follows a garbage in, garbage out philosophy, right? So the quality of data, the cleanliness of data, the ease with which we can feed data to our artificial intelligence system is one of the key reasons that will drive the success of this project. So as of now, we feed market price data, we feed fundamentals data. So you can think of quarterly results, management con calls, annual reports, presentations into our artificial intelligence system. Our Claude has access to macro data. So things like what is the interest rate right now? What happened in the last RBI meeting? What happened in the last Federal Reserve meeting? What are the GST collections looking like? What are the auto sales looking like? What's the what's the regime that the US markets are in? So all of these data is also fed into Claude. So let's say another example would be the geopolitical situation right now, right? Which we are in, where there's a war between US and Iran and oil prices are spiking every day. So all of this data is essentially fed into Claude so that it can make the correct decisions. Next up is calendars and flows. So given that we are looking at Nifty 500 as an index, we have to essentially have a very strong process of understanding when earnings are being released for each stock. And then that itself triggers a workflow of reanalyzing every stock. And lastly, news and reports, right? So we look at a lot of different sources like Google News, RBI, IMF, World Bank publications to get an idea of the macro picture as well as the landscape in which we are operating. So essentially, we try to build automated data pipelines using APIs and MCPs. We then feed it into Claude, and then Claude analyzes it and makes investment decisions. I think one important thing that I want to put forth over here is that I believe like the Indian ecosystem still has a long way to go in terms of creating data sources which can be consumed by artificial intelligence in their native language, right? So when I compare the Indian landscape to, let's say, what's out there for the US, if you do just a few Google searches, you'll realize that the kind of data feeds available for the US and the kind of, let's say, alternate data available in that particular market is much more mature than what's available for India. So, but then obviously India should catch up as well. And as soon as data becomes cleaner, more accessible, and a wide variety of data is available, the edge for this project should only improve, right? So now let's talk about how does the portfolio get constructed. So we start, and over here, what I'm going to do is I'm going to start high level, where I'll tell you essentially how we move from 500 stocks to 9 stocks. And then over the next couple of slides, we are going to deep dive into the research angle of it. That how do we exactly zoom in into one particular stock? So first we start with 500 stocks. We run certain screens and governance gates. So things like, is there enough data available? So if it's a very new company, right, which let's say has been reported only for 1 year or so, then that does not make the cut for us because we are looking for quality companies at reasonable valuations, right? Things like high promoter pledge is also a red flag for us. So we run some basic screens, which essentially shortens or reduces the number to 420, excuse me, 425. Now for these 425 stocks, we rate them on 7 parameters: quality, growth, balance sheet, governance, valuation, earnings quality, and technicals. So this is a rating that's done out of 100, right? And these 425 stocks get a rating. After this, what happens is that we choose the best stocks from each sector. The reason why we have a sector filtration over here is that because we do not want one, we want every sector to be representative in our ultimate universe, right? So let's say if we would just sort of filter it based on just stocks and absolute scoring, certain sectors might not be representative, which is, I believe, not the best way to go forward, right? So once we have the 190 sector shortlist, after that, we run another sort of scoring mechanism on two main pillars, quality and price, and we build a dedicated deep research list, right? So another important thing for me to explain to you why we have this filtration process is that we need to be aware of where do we want to spend our time and energy in terms of token usage, because artificial intelligence at the end of the day is an expensive technology as of today. So it is very difficult for me to screen all the 500 stocks to the level of detail that I want to. So, which is why we have devised this process where we reduce the 500 stocks, right, by doing incremental amount of work at each stage into a dedicated deep research list. So there were about 50 stocks that was selected for the deep research when we launched the portfolio on 1st of June. Now, this 50 is just a guiding number because right now the earnings season is on. So we are running this process again for each stock. So this 50 research list might become 60, it might become 65 as well, it might become 45 as well. So what the point I'm trying to drive is that it's not like a hard number that we're looking at, that's 50 only. But yes, we do want to focus our energy, time, and resources on a select few shortlisted stocks. And the initial portfolio that we launched has 9 stocks. And once again, I'm going to be revealing the exact 9 stocks in a bit. So I hope everybody is sort of clear on how the filtration process works. If you guys can just react with an emoji over here so that I know that you guys are following. And so I'll proceed. And another thing that I'd like to say at this point is that feel free to write your questions down, right? And we'll go through it later. So we, up until now, what have we done? We have understood how the portfolio is set up, what is the philosophy, right? Um, who does what? How do we filter from 500 stocks to 50 stocks? And now I want to talk about the deep research process. So over here, I have filtered this down into 6 broad steps. But in reality, we have 18 steps that we follow for each of the 50 deep research um, stocks. So steps 1, 2, and 3, probably 1 and 2 is something that we have already touched upon. Step 1 is collect. So we essentially maintain a dossier for each stock, right? So let's say if you go to a screener.in, right, and you write HDFC Bank, you're going to see a page with all of its data, right? So we similarly have a AI native file, which is a .m markdown file, where we maintain all of the data for a particular company and we keep updating it on a daily, weekly, monthly basis. So let's say, for example, given that we're talking about HDFC Bank, right? A new chairman is about to be selected and there is some commentary around that. So that's a point that is really interesting for us. So we have that in our database. Next up is we analyze these things, right? So we analyze the business, the balance sheets, the valuation, and the governance. And throughout this entire process, what we do is we leverage on a lot of AI workflows, agents, and skills, which I'm going to touch upon in a bit. The third part, and I think is very important, which is verification, because I feel one of the key issues right now with artificial intelligence is that how do you trust it? Because I think one of the key issues that is being highlighted by a wide variety of people is that artificial intelligence makes a lot of errors. And that is correct. I'm not going to say that AI does not make errors. But what we can do is essentially build verification layers, audit mechanisms that run in silo of our workflow, right? And challenge and sort of check the data that is being collected and analyzed. So just to give you an example, right? Claude is our base case model that we are using for this entire project, right? But what we use is we use Gemini to essentially talk to Claude via an API access and to challenge certain numbers, right? So what this does is that it sort of solves for groupthink problems. Because what can happen is that if, and I think I'm sure you guys have also noticed this working with AI, is that it tends to give you answers that you are looking for. So if you use two independent sort of AI technologies, right, there won't be any groupthink. And then you can instruct them to challenge certain things or to independently verify certain things. So the point I'm trying to drive over here is that verification is important to set up audit layers, to set up processes, you know, that help you solve for this problem is extremely important. Does AI still make errors? It does, right? But it's a continuous work in progress. So let's continue with this slide now. Number 4 is preparing an investment thesis. And over here, I'd like to give you an example of how independent agents work together. So up until now, we have collected data, we have analyzed data, and we have verified it, right? And this is part of our deep research list. So now we are interested to buy this. So over here, what we do is firstly, we write the business case for it and we prepare a detailed investment thesis document, which is similar to what you'd see traditional fund managers and the industry preparing. But over here, we have specified agents whose job is to argue whether this particular stock is a good proposition for us to invest in or not. So three such, sorry, three such agents are the bull agent. So the job of the bull agent is to argue for a buy, right? So it analyzes everything and it gives you reasons why this particular stock should be bought. The second one is the bear agent. This looks at the risks aspect of it, like what is the reason or what are the reasons why we should not buy this particular stock. And the third one is a devil's advocate. So the devil's advocate independently will read the bull's case and the bear's case, and it will come up with a decision on whether we should buy this particular stock or not. And I think the line over here which says run in isolation never sees the other's work is very important. And this is what I was trying to communicate earlier, right? So we want to essentially build certain silos in which certain parts of our project are working, because that's when the different parts of the project or AI is going to be able to challenge each other and ultimately come up with the correct decision for us. So once the decision has been made, we record everything, right? Because we make a memo, we have a decision making ledger, and we write down the exit criteria so that we exactly know why we bought a stock, we exactly know when we bought a stock, we exactly know what are the exit criteria. And when these exit criteria are triggered, we know what to do. So now that the deep research process is done, I'm going to take you through two stocks that the portfolio holds up until now, right? So Kaplan Point is a company that we own. It's up 23.4% since we bought. It's about 14% of our portfolio right now. And the research score, which is the initial score out of 100 given to this stock, was 70.8. And over here, I've obviously had to summarize this for to keep it very succinct, but you can see the investment thesis. So over here, what Claude believes is that Kaplan Point owns its own distribution network. 80% of the distribution network is controlled by them itself. Their balance sheet is healthy, and they have been reinvesting into the business as well, right? So these are some of the reasons why it suggested us to buy this particular stock. And the margin of safety is something that we update on a monthly basis. What this means is that Claude believes the stock has an intrinsic value, right? Let's say Claude believes the intrinsic value is 1,000. And once again, Claude has a few thesis, like a bull case, a bear case. So if the bull case gets triggered, maybe the intrinsic value can be upgraded to 1,100. Versus the bear case, it might be downgraded to 900. And on a monthly basis, we compare this with the LTP and we come up with a margin of safety. Margin of safety is essentially the cushion we have in terms of where the stock is trading versus where we believe is the right value. And ideally, we like to have a certain degree of margin of safety because of the investment philosophy through which we drive this project, right? Now, on the right, bottom right of this particular slide is what would prove us wrong. So here are the conditions exactly that we track every time an earnings report is announced, right? So over here, let's say the second point, any adverse US FDA finding at its single US sterile plant, right? So over here, we are launching a news agents on a daily, weekly, monthly basis. And if this, or if we get a notification that this is happening, then it is going to be triggered to us. And then we might consider selling this particular position. So that is Kaplan Point. The second one is Infosys. Now, I do not need to introduce Infosys as a company because I think everybody knows what Infosys does. And I think everybody is also aware of the challenges the Nifty IT sector has been facing up until now. But based on our process, like Claude believes Infosys at the price at which it was trading was a good buy. So you'll see over here the margin of safety, excuse me, is at 20%, which for a large blue chip company is extremely high, right? And what you can also see is that we have lost about 14% on this position for now. So the thesis has not played out up until now. Now, I am aware of the fact that this can be a value trap as well. So let's go through each and every point of the investment thesis over here. I think the ROE, ROC is good. Cash flows are good for the IT business. I think all of us know that. And the valuations are also over here is the what would prove us wrong and the phrase AI net negative. I think because we have summarized this slide, the point is not driven clear over here. But Claude is very well aware of the challenges that Nifty IT is facing versus AI, right? But what Claude believes is that the market has basically re-rated the IT index to a level which is not fair because it believes that AI might be a net positive contributor for Infosys. Rather, it believes that there is a possibility that AI might help generate revenue for companies like Infosys. Because I think to just draw parallels, like I've been sharing with you over the last half an hour, 40 minutes, that building AI systems which can operate at scale with trust and efficiency is not as simple as just writing a few prompts. So now you compare this with traditional finance companies, healthcare companies, consumer companies, and you have to basically ask your question that whether the talent or the people or the employees of these companies have the talent to build these systems. If the answer of that is yes, great. If it's no, then they would need companies like Infosys and their talent to come and build systems for them. So essentially, this is the investment thesis that Claude has for Infosys, right? It believes that the stock has been beaten down a lot, and it feels like the market fears that AI might destroy the Infosys business. But Claude is saying that at this price, it's a good buy, and AI, there is a possibility that AI might contribute to Infosys businesses. But then we have also got exit criteria, which is written down over here, right? So let's say if the growth falls under 2% or the margin falls below 20% for 2+ quarters. And another interesting thing about Infosys is that it announced its results on the 23rd of July. So we are going to be putting up a social media post either today or tomorrow, which is essentially going to compare the performance of Infosys versus the things that we have mentioned over here, right? So this is where the tracking comes into play, which we do on a regular basis. So I think now we have covered how the portfolio actually works, right? How do we narrow down from 500 stocks to 9 stocks that we hold? And I've given you some case studies as well. One case study of a stock that has done well, and another case study of a stock that's not done well so far, right? Now, and I think this is probably the most important part for everybody attending this session who want to incorporate AI into their workflows is what is the best way or what are certain tools, techniques that you need to learn about to build systems, right? So over here, I'd request Chirag once again to put up a poll because I just want to understand how my audience uses artificial intelligence today in terms of the medium or the interface through which you guys are using AI. Okay. And I think this is a multiple choice question. So you guys can feel free to choose more options. I think we'll give this maybe another 15 seconds so everybody can answer. Okay, so I think the key takeaway that I'm getting over here is that a coding interface, let's say a VS Code or a terminal is not being used by a lot of my audience, right? So over here, I'll just maybe share a bit more about my coding skill set, right? So I studied economics in school. I am from a non-coding background, but I have sort of learned how to code, right? And then AI came, and over the last year, I've been really using AI to upskill myself. But to basically say that I am a expert coder would be absolutely wrong. But I use Claude and other agents through a coding interface. And the reason why I do this is the kind of things you can do is really so much more than, let's say, a mobile app or a web app. So I guess my recommendation to you guys would be to consider using AI technologies through coding interfaces. It might be a little daunting or challenging or overwhelming to begin with, but this is the right way to go because just the kind of things and the output you can generate is much more dynamic and powerful versus, let's say, a web app and desktop app. So I'm going to exactly show you a few things that you can use, right? And that you can use and leverage to essentially build good things. So the first one is a skill, and this might get a bit technical and theoretical. I'll try to keep it as simple and layman as possible, and I'll try to give examples as well of what how we are using it in our project. So a skill is essentially something that it's a document that you can prepare that AI is going to refer to and follow the exact same steps. So let's say if you're doing the same things again and again, right, and you want to do it in a specific way, you can just make a skill which artificial intelligence or your AI model can refer to every time. So you might have come across situations where you feel like you're explaining AI the same thing like 3 or 4 times in a week. That's when you should realize that, okay, this is when we should use, this is when I should build a skill. So in our project, an example would be reading an annual report, right? So we have a lot of different companies, right? We have 500 companies that we're looking at, maybe let's say 100 companies that we're looking at in depth. Now we want to read the annual reports of all of these companies, and we also want to analyze and store these reports in a standardized format. So rather than duplicating this process, what we can do is we can create a skill that our model can refer to every time it is processing an annual report, right? So next is a workflow, right? So a workflow is nothing but like a sequence of steps that you have told your AI model to run from start to finish. And it is going to follow the exact same steps every time. So for our project, one example would be the earnings workflow. So like I think everybody knows that the Q1 earnings are being announced on a daily basis, right? So I'll tell you how we go about it. We have an earnings calendar which gets updated from the BSC website on a daily basis. So we exactly know which companies are announcing results when, right? So let's say, for example, today, 8 to 10 companies are announcing their results. Our system knows that. Then the system is going to go and check on Screener or other relevant websites if the results have been announced. Then it's going to pull those results out into a standardized format. And over here, we're going to be leveraging skills to ensure that the process or the way it's done is the exact same, right? After that, we redo the research score for that particular stock for which the earnings results are out. So you had seen that Kaplan Point and Infosys was scored about 70 in our initial analysis. But what might happen is that the let's say Kaplan Point's results are really good. The score might be upgraded to a 75, or Infosys results might have been bad, so the score might be downgraded, right, to a 65 or to a 60, and then in turn that would trigger Infosys. It might trigger a sell for Infosys, and it might downgrade Infosys from a deep research book to just something that is on a watch list. So coming back to the earnings flow, right? It looks at it basically gets all of the earnings data in. It rescores the company. If it passes a certain gate, it runs the full research process, which is the 6 step process that I told you about with the bull and the bear agent. And then it grades it and it writes the decision memo. So the reason why this is important again is that I do not want to tell AI 10 to 12 times a day that do steps 1 to 10 for the stocks that have uh, released their results, right? I just want to build a system and a process which AI follows on a regular basis. So that is the idea of a workflow. Next up is agents. Agents are simply artificial intelligence sort of entities that have a specific job. They are given a background, they are given a brief, they are told what is expected to do of them, and we also give them access to data, skills, and tools that allow them to do a job. So I think I've briefly touched upon the bull agent, the bear agent. Let's cover the macro agent over here. So the job of the macro agent is to essentially be up to date with macroeconomic and global news, right? So on a daily basis, we are looking at a lot of different news data and we are updating. The agent is sourcing for these news. It's updating itself and the context with all of these things. And over here, we do not allow the agent to make any predictions or forecasts. Right? We just tell the agent, your job is to understand where the world is at right now. And then this agent sits on top of, let's say, other agents like specific agents like maybe the equity analyst or the valuation specialist to give it context of where we are at and then in turn make effective decisions. So in terms of our project, we have about 15 to 18 agents that are invoked automatically when required. So just to connect the dots over here, right? Let's say you're running a workflow. A part of a workflow might also invoke the agent. So let's say I'll just go back to the previous slide, right? So over here, when we are running the research process, right? That is when the bull bear agent is going to be invoked. And these agents, like I told you, have a specific job and they are supposedly supposed to be experts at it. So this is the third tool, agents. The fourth one, and probably the most important one, I wouldn't say the most important one, but maybe the most meta one, if I can use that word, is routines. So routines are workflows that you can run on an automated basis on the cloud when nobody is watching, right? So as of now, we have three routines set up in our project. One routine is a daily routine, which is called the EOD brief. And I think what I'll try to do is I'll just try to show you guys how this exactly works, even though it takes a bit of time, right? Once we are done with this presentation. So the EOD brief is something that runs at the end of every day at 5 p.m. on an automated basis. It looks for news, filings, releases. It checks our holdings against its conditions. It also flags a large move. So let's say we owned a particular stock which moved 12.5% on a particular day, right? So it is going to highlight that and it's going to try to find reasons as to why that happened. And because then if it is a critical reason, we might have to update our entire investment thesis and we might have to make a decision of upsizing the stock. Similarly, it can work the other way around also. So just to give you an example, I think in the last month or so, Accenture, which is you could say the leader of the IT pack in the world, the traditional IT services pack fell by 18%, right? Because of which Nifty IT fell by a significant amount as well. So on a daily basis, this particular routine ran and it flagged that Accenture has fallen by 18%. And we need to revisit what's happening in the IT space. Is it being re-rated or not? Right. And lastly, it rebuilds the public dashboard. So like I was mentioning in the start of the presentation, we have a dashboard where you can follow the portfolio that also gets updated on a daily basis through this routine itself. Now, the weekly routine, which runs every Saturday at 11 a.m., is a more of a deep dive of what's happened. And it's at a, I would say, like at a slightly higher level in terms of the things it looks at. So over here, our macro and sector notes are updated. right? We write a weekly digest, which gets emailed to me so I can read it and just have an understanding of what's happened in this week. And similarly, the month, uh, we also run a routine at the end of every month, which is even higher level, right? So the idea of routines is to essentially have artificial intelligence working for you in a reliable, consistent manner on periodic intervals, right? So that your life becomes easier and you do not have to track each and everything on a daily basis. So moving on to the last one, which is loops, right? And a loop is something which ties everything together. So I think I've been talking a lot about how we have this India AI portfolio, and it's sort of like a vast AI project. But we need a mechanism that allows different parts of my project to talk to each other, right? And to update each other with its context. So to give you an example, like for example, Donald Trump wakes up and he says that let's tariff India by a certain percentage. I think there was a news on Donald Trump raising tariffs in the India pharma sector, right? So our routines are going to catch that, right? Our routines will catch that and it will highlight it to us. But through loops, what's going to happen is that it's going to go to a macro agent. It's going to tell a macro agent that this has happened, update your context. It's going to go to my sector pharma agent. It's going to tell that agent that Trump has announced this, you should be aware of this. And then ultimately, this should feed into my Kaplan Point dossier, which is the pharma company that we own, saying that Trump has announced this, it might reflect in your price. You might have to revisit your investment thesis, right? So this is how loops work. They essentially help connect different parts of the project and make your system work, right? And what's happening in the AI world now is that the technology is improving significantly to make these sort of tools more and more reliable and easy for you to deploy, right? So, yeah, that's loops. I think over here, there's an example of an RBI changes interest rate, which also has its own workflow. But I think I hope you've got the point when it comes to loops. So, the last thing, or one of the last things that I want to talk about are risks and limitations. So, I hope that you've understood my view on AI and this particular project. I am not saying that AI is always right. In fact, AI breaks a lot of times. I'm not saying that AI is better than humans because it's not the truth as of now, right? So there are certain limitations and risks which I think I would like to state extremely openly and transparently so that you exactly know, what are the issues that can arise. And when you think about running an investment portfolio, I think a lot of people think about risks like a black swan risk, or something happens. Let's say if you're a developing country, a governance risk, right? What if there's a regime change? A government has gone from a pro-economic sort of stance to something else. But what for our specific project, I do not see the market side risk as critical to us. What I see as the biggest risk is on the AI side, right? So let's go through each of these points one by one. The first one is restricted access to the best AI models. So you guys must have read about Claude Mythos, which is apparently one of the best and the most advanced AI models, which Anthropic, which is the founding company of Claude, wanted to release, but the US government blocked the release. And they had to sort of rename it to Fable and also release it in a tiered format. So, what I'm trying to say is that there might be a point in time where this becomes such an advantage or such a key sort of resource for a country that they do not want other countries to use it. And I think we are already seeing some indications of this with US and China. So for somebody like me, right, who is dependent or whose model is dependent on using the best AI frontier technologies, this is one of the biggest risks because if I don't have access to the best models, this portfolio and the odds of the India AI portfolio succeeding is going to be lower, right? So here's when things like Sarvam AI, which is India's frontier AI company, from my knowledge as of now, comes into play, right? The second part is second and third, I'm going to take it together, is that AI models make mistakes, they hallucinate, systems and processes break down often, which is a reality, right? So, and as soon as you start your journey of building something with AI, you will realize that a lot of things break unexpectedly, right? So, this is a continuous process or a loop where you keep improving your AI systems. And once again, what you can do is you can build mechanisms, layers, right, that help you tackle this situation. But will you be able to solve for 100% of it? And will you be able to come to a point where you have built a system in and you do not touch it for a month, let's say? I highly doubt it, right? The fourth point is AI models can be extremely expensive, right? So subscriptions are expensive. You have to end up getting multiple subscriptions as well, right? And over here, I'm talking about where we are at today, because I do believe that AI models can get commoditized in the future and it can become significantly cheaper. Similar to like how, let's say, when the computer was launched, it was very expensive, but now everybody has access to really good computers and better computers, right? So something similar might happen with AI. But as of now, AI models are expensive. So just to give you an example, the routines I run on the cloud, right, they are on a paid basis. The reason why I've decided to do it on a daily basis only and not real time is because I'd be burning a lot of tokens and in turn paying an exorbitant amount of money. But if I could do it, let's say, instead of daily, on an hourly basis, then I could potentially build a trading portfolio with a faster churn, right? But as of now, we are not there yet. And the last point is technology is just moving too quickly. Like if you think about what we were doing with AI over the last year, where we were just asking it basic questions, essentially using it as an alternative to Google search, to versus now what's happening with AI. And we are seeing companies come out. So, like companies like Bajaj Finance come out and say that AI is contributing to their revenue to a certain extent. So, the technology is really moving extremely fast. But this also means that, let's say, a project that you have built today, right, might be irrelevant in the next 2 months because AI can become so good that it can do the job of that project much faster. So, just to sort of close this point out, Claude has come up with like Claude Lawyer, right, which essentially can do a bunch of things that lawyers traditionally used to do, right? So, one can argue that um, this is a threat to lawyers. And similarly, they have done this for designers, they have done this for finance, and so on, right? So the technology is moving extremely fast, is what I'm trying to say. So just to close out this conversation, I'll just reveal the portfolio we have and the performance of the portfolio up until now. And so these are the 9 holdings that we are fully deployed into, right? So, and you guys can track whatever we are doing in our dashboards or on our socials along with the entire process. And so over here, I think what I just want to put out is that you will see a mix of blue chip companies, things like HDFC Bank, ICICI Bank, Infosys, that everybody knows about. You will see some safer companies like Castrol and Hero Motocorp. So these are dividend heavy companies, right? With a mature sort of business model. And then you will see some contrarian companies like an Eclerx or an IGI India or a BLS International, right? So this is just to give you a flavor of how Claude goes about constructing its portfolio, where it allocates to a variety of companies across different sectors, different market caps, and so on, to give us the best chance to hopefully beat the market over 3 years. So with that, I think, yeah, I'm coming to a close with the presentation. I just say that, so this question that's on the top of this page, can Claude beat the Nifty 500 over 3 years? I myself do not know the answer to this. I'm just building a system and a process and documenting the journey transparently for everybody to see, right? So if you're interested to follow how we proceed, you guys can follow us on our socials. And if you're interested to upskill AI, right? And if you're interested to essentially work with subject matter experts who can take your skills or who can help you elevate your AI skills, I think SSCI is the right place for that. So with that, I'd like to invite Sanjay sir again and the team to, yeah, close out the presentation.
Thank you, Shreyansh. I think you must have been speaking in this manner for the first time, or maybe for quite so long. And that is why I could see that you had interruptions of having to drink water in between. So, great presentation. Uh, People have been asking whether this will be uploaded on YouTube. Most probably it will be. It has been recorded. Uh, People also have been asking, simple questions that I do this on GPT, I do this on Gemini. What does it happen this way? So the whole point is that I think people have come to the immature conclusion that if you know how to use GPT, how to put prompts in GPT, that's all that AI is all about. And that is exactly the mistake that people are making. Uh, those of you out of the crowd who have started their journey in finance must have really felt a lot of deep stuff that was going on. मतलब it is not obviously possible उसको open करके खोल के उस तरह से बताना. It was not a class presentation going on, but I'm sure the drifts you all must have got. कि what is the drift? What is he doing and what is he saying about? Uh, so Shreyansh, tell me something that how did you get
Yeah,
this idea? How did you get this idea कि ये एआई को यूज करके एक्चुअल मनी को इन्वेस्ट करना चाहिए? ये आइडिया कहाँ आया, कब आया, कैसे आया, एट व्हाट पॉइंट ऑफ टाइम?
yeah. So basically, I've been using AI for the last year, right, to help me with my own trading work and let's say my day job, and it's really been a game changer for me. And one of my alumni is from Singapore when I was studying over there. He has launched something called the Claude portfolio in the US market, right? And so he's doing something very similar. I do not exactly know how he structured it, if he structured it the way I have done it, but the idea is similar, just to see if frontier AI models can create alpha, right? And so he's now opened it to the public, and they have an investment of about $20 million of of live funds deployed into his strategies. So I was just looking at it and I was like, why not do it for India? So that's essentially how the idea started. And yeah, so it's evolved since then.
Okay. The point is that the enablements as to the fact that you have a certain experience working at some institutions and you have had your education in NUS. Um, how much of that would play a role in terms of your being able to, at least set it up? I'm not saying that you have been successful. That the time will say.
Yeah,
But how much?
yeah.
And if you compare your counterparts, suppose your friends at your time, okay, their skills and all that. So how would you try to answer that?
Yeah, so I feel like in the day and age we live, I personally am not a big believer that the university you go to defines you, right? Like, I think this is one thing I say to a lot of people who talk to me is like, probably the most important skill set in today's world is the ability to learn how to learn, right? Because there are so many things available out there that was never available. So I believe, like, if somebody wants to learn something, I don't think, if they have an internet connection, if they are curious, right, and if they have the dedication and hard work, they most probably can do it. So
Hmm.
that's one piece of the advice. I am not a big believer of going to the best university. And I mean, it's great. Obviously, I mean, that's good. But even if that's not the case, I don't think that changes much. And the other thing that I'd recommend people is to get their hands dirty, right? Just pick up something you want to do and start building. It's not going to be perfect. It's probably going to be ugly. It's going to break a lot, but that's the only way to do it. So I think that's just my 2 cents.
Okay. Uh, like a combination of human and AI is what ultimately was put forth as we saw it. It is not
Yeah.
like AI was functioning by its own. There was a lot of human intelligence that was there, but I think the audience on the literally on the face of it, can Claude beat Nifty over the next 3 years? Don't look at the fact that it's human accountability, human experience, okay, own money, risk management, deciding what systems. So all that is the bigger play at role, other than the fact that the AI systems being put in place. Correct? Would you like to highlight the same? Because otherwise, I think there is a wrong message that many of the participants are getting it.
Yeah, definitely. So basically, what we are doing over here is we are basically building a system infrastructure that allows Claude or any other AI to do its job, right? So just to say that Claude is making decisions and we are taking a back seat is absolutely wrong, because building the system, the infrastructure, the process is, one can argue, the more difficult thing, right? So you're definitely right. Even though we put it as, can Claude beat the Nifty 500 over 3 years, which is also a correct statement, because ultimately Claude is making the decisions on whether to buy a stock or to sell a stock. But a big piece of the work is to set up the infrastructure and the ecosystem within which the AI can do its job to the best way possible. So it's definitely like I try to highlight through the Venn diagram, right? There are certain tasks that the AI owns, there are certain tasks that I own, and there are certain things we do together. So that is the status of this project as of now.
Why didn't this India AI portfolio, the stuff that you have created, get into a long short mode? Only long? Why is it?
I think it's got to do with where the technology is right now, the kind of data that's available, right? So when you think about creating a portfolio, an investing portfolio, and the philosophy with which we have created this is not very complicated, right? So for me, similarly, I wanted to start somewhere which is more traditional in nature and then create an infrastructure around it. Because over here, creating this system in itself is a huge task, right? So, on top of that, if I wanted to do a very complicated strategy, it would be quite a few difficult things trying to do it together. So, yes, we have started with this particular project, but my goal and intention is to build infrastructure that we can then reuse for different trading strategies. So, basically, what you are saying about a long shot, that is probably step three, four, or five. Right now, we are at step one and two of creating something, proving that there is value in this. And once it's proved that there is value in it, to scale this and to iterate is is essentially what we can do after this.
So the alumni that you were referring to right now from NUS, okay, which you said gave you some
Yeah.
inspiration, the fund, like $20 million that they have now opened it to public, is that a long only fund or a long short fund?
It's a long only fund, but it's more of a trading fund from what I gather. Again,
Hmm.
I do not know the process in depth, but from whatever I've followed, and I've had a conversation with him as well,
Hmm.
right? He's actually a professor in one of the top universities in the US. So he was telling me it's more of a trading portfolio. So the churn of that portfolio is higher versus what we are doing is more long term investing. Yeah. And yeah.
Okay. And you have also used sentiments as in social media tweets and all that in your this thing.
So sentiment analysis is not fully baked in as of now, right?
Hmm.
Because of data availability again. So that is not something that is in the process as of now, but it's something that we should add. So what I am trying to, because see, we are 2 months into this project, right? Just to get the infrastructure sorted. And for, I think sentiment analysis is very important. But first I wanted to ensure that the primary data feeds are sorted, right? and that's working well. So yeah, this is something that we can incorporate and we should incorporate in the future as well.
Would it be correct for the participants to infer that you are doing a lot of rule-based systematic trading, not using AI, okay, separately, and a part of your work you started to get it manifested through this India AI portfolio as an experiment with a small amount of money?
Yeah, I mean that. Sorry, can you just repeat that question
I
once
said
again?
basically, suppose you are full time into investing,
Yeah,
trading,
that's right.
okay,
Hmm.
trading, and that trading which you do is rule based, it's systematic, it's quant
Yeah.
based, but it is
Hmm.
not using AI the way in which we were shown. And
Yeah.
then when you found that AI is actually coming out with good tools and it's augmenting processes and making it more
Mm.
based, you thought of experimenting the same with a certain niche strategy of building a long, low frequency trading portfolio, correct? And a lot of long short is going on separately.
Yeah, that's right. So just to give you an overview about my day job,
Mm.
just to let the audience know, is that I've been using AI a lot from an analysis perspective, from a productivity perspective, from an execution perspective, right? But AI has not been used in my own trading as the brains, if you could put it that way. Like, right, that's always been a human.
Mm.
So with the India AI portfolio, what I wanted to do was I wanted AI to become the brains, right? And I see, ultimately, I'm an investor and a trader. What do I want? I want profitable strategies, right? And I want uncorrelated profitable strategies. So I am a quantitative trader for now. If I can get a profitable fundamental strategy, right, it becomes an investable product for me and then I can scale it. So the idea with the India AI portfolio is multifold. Firstly, to test how good AI can be as a stock picker. If it does well in the 3 years, we can definitely scale it, right? And it is also to essentially ensure that I am at the cutting edge end of how AI is being used to solve real complex problems. And then I can apply it to the other things I use as well. Yeah.
There are so many AI courses, okay, over the last 3, 4, 5 years since the AI buzzword is there. There are so many AI courses that are floating around, and of course, some of them may be also related to trading. I am also not
Mhm.
much aware of the same, although I know of some of them. So the whole point is that if since you are in this spectrum, you must have also, as a way to learn, to know more about the space, thought about just looking at the spectrum of what content is available, maybe some courses, maybe some books, some stuff or something. So how would you rate on a scale of 1 to 10 generally about the courses on AI which are available?
I feel like my honest take on this is it's a very new technology. So, like the people who are teaching it are also having to reinvent the course sort of material on the fly because things are changing so fast, right? Having said that, there are a few ways of going about this, right? A is if you want to learn pure AI, right? Which is essentially there is AI and then there's an industry or a profession you're part of. Ideally, we want to be in the middle, right? In the intersection of it, right? So there are courses which teach you pure AI. So let's say Anthropic, OpenAI, and all these guys have their own courses which you can do, which will help you with pure AI. Then you have industry specific courses, right? Which is, I think, a lot of courses that SSCA also does. If you want to become a CFA, if you want to do FRM and stuff like that. But I think where there is a gap, and I think SSCA is trying to address that with the analyst stack, is the middle part, right? How do you integrate AI and the use of AI versus industry domain knowledge also? So I feel like not a lot of courses are there out there that are trying to solve for both of these problems and create a unique solution. So, and obviously, so this is a curated way of going about it. And there is always an unstructured process of learning as well that one can follow and deep dive into. Yeah.
Correct. Correct. So what I meant was that, see, ultimately the participants who are listening, they require some enablement. Okay, many of the participants, they require some enablement. As you said towards the end of your submission, that there is an unstructured way of learning. And believe me, I belong to that school. Throughout my days, I followed that unstructured way of learning from this book, that book, all over the place, and ultimately something gets built up. But many of the participants are used to structured way of learning, which is more
Yeah.
curated and all that. And for that, of course, you mentioned we have an entire AI module in Analyst Stack, okay, where we are actually addressing fundamental investing, not quant based investing, but fundamental investing, because I think AI has a lot of augmentation and scalability as far as fundamental investing is concerned. Of course, Claude has come out with financial modeling expertise, such that at a click of a button you can create a financial model. But those financial models are obviously not respected in the industry because the deep knowledge of that particular person who has created is not there at all. And students also look forward toward the fact that if there would have been in quant investing, a similar AI type module, but obviously we don't have that in place, and we are not promising that we will have any such module in place in future right now, because as I introduced Shreyansh at the beginning, he's a person who is not providing stock tips. He's not a person not selling courses, not running some subscription. At my deep request, and given that he has been so close to us, and given the fact that our entire student community, they should understand the importance of both fundamental investing and quant investing, and those who have their own tendencies towards what they should work towards the same. If we do not create a platform wherein people can talk and think about quant investing, they don't look at the size of the industry globally, what's happening in quant investing, they would be like surprised maybe a couple of years down the road when they find that quant investing picks up full-fledged in India, and you find so many role models. So this is the correct age at which you build your AI skills. Okay, maybe through your unstructured programs or whatever, through analyst stack. Okay, and at the same time show your interest in quant investing, both in CFA and FRM. We have a lot of stuff on quant investing, wonderful stuff. Okay, and that should be the flavor of the day. One last question, Shreyansh.
Yeah.
Since you cleared with distinction in economics, so the way I look at it is that in economics, we look at capital market expectations. Okay. Uh, what are the broad forecasts of different asset classes depending upon the
Mhm.
macroeconomic happenings? And based on that, we think about asset allocation. Okay, whether it is geographical asset allocation across economies, or it is asset allocation among different asset classes like equity, fixed
Mhm.
income, and all that. Uh, so what I meant is that somewhere down the road, I think you will have to pick that up as your strength, where you are trying to generate capital market expectations with the help of AI. Okay. And you are able to then transfer that into investing, whether long only or long short, because there are a number of people who do not want a long beta exposure for a certain section of their portfolio. So how would you transfer to cash or short whenever your CME forecasts that these periods are not good enough? Would you like to comment on that?
Yeah, so I think that's extremely important. And let's say if we take a step back, and from whatever I have learned from my peers, as well as my experiences working in Singapore in, let's say, trading firms, or my friends working in hedge funds, what they talk about extremely important. Like one of the key things they work on in terms of research projects is, let's say, understanding regimes, right? So essentially, I've also been working on a regime modeling framework, which essentially tries to break down exactly what sort of cycle the financial markets as well as the economy is in, right? And then this sits on top of all of the investing and trading ideas and strategies we have. So just to give you an example, if somebody told you that 2025 might not be a great year for momentum strategies, right? There's a probability that 2025 might not be good for momentum strategies based on certain parameters and a model, right? And you would reduce your exposure to momentum strategies. That would have paid very well for you, right? So, to answer your question, yes, it's extremely important to do that. And it's a strategic lever that will help you across your different investing and trading strategies. So that's point one. Point two is, once you have this regime framework, right, this becomes like a research model. This becomes something that sits right on top of your trading stack or investing stack. Let's put it that way. Then another thing that we do is we have created a model which does a very simple thing. It gives you an allocation towards equity, debt, and gold. That is it, right? And then within equity, you can deploy using the regime model, right, across your different strategies. So these are some sort of this is where the economics and the macro thinking comes into play, right? So yeah,
Got it, got it. See, I did not constrain myself by asking the questions, and many of the audience people may be not getting 100% of some of the stuff that we are discussing. I'm really sorry to the audience about the same, but there are other audience. I know some parents have also joined who are in financial markets, so I really wanted the discussion to be really rich. We will just have, I think, another 10-15 minutes of yours through Chirag, because there must be a number of Q&A which the audience must have asked, and it would be
yeah.
unfortunate and not good if we don't take up those questions. Chirag, it's all over to you.
Yeah. So the first question that I have is, if you had to invest your family's entire long-term wealth in one approach, would you choose your AI portfolio or low-cost Nifty 500 index fund? Please explain your decision using historical evidence, expected return risk, drawdowns costs, and probability of outperformance.
Yeah. So, okay. So I think giving a detailed answer to this will be tough because I don't have the numbers, right? But it's very obvious that I would not allocate a significant percentage of my own wealth or my family's wealth in the India AI portfolio because, like, how this particular portfolio is framed is that it's a public experiment. So it's something that we are experimenting with. It's not there yet as of now, but in my opinion, it is relevant enough for me to deploy a certain amount of money to have skin in the game and just to see where this evolves. And to essentially summarize my answer, no, 100% I would not invest a material amount of money into the India AI portfolio as of now. But this answer might change in the next year or 2 years, depending on how the technology evolves, how our experiment does, and how mainstream this way of investing becomes. But
Yeah.
it's definitely like something that can scale a lot because we are already seeing it in the US that people have invested or co-invested $20 million into a similar project.
Yeah, also the person wanted answer regarding historical data. So there is no historical data regarding how India AI portfolio has, for example, performed over the last 20 years or so. Okay, so we can't use historical data that way for comparison. Chirag.
Yeah. So the next question is, what kind of credit usage are you consuming to generate this sort of result?
Yeah, so as of now, I'll just break down the subscriptions I use. I have a $200 Claude subscription, right? I pay Gemini API as per usage, and I pay for the cloud routines. So overall, this can cost anywhere between 30 to 35,000 rupees a month as of now. But then I also have to say that this is not the only thing I'm doing with these subscriptions. Like I was telling you, I've been leveraging AI across my different projects, workflows, and trading strategies, right? And this is just one of the things I'm doing. Yeah.
Okay, so maybe we can imagine that 20% of your allocation is going towards this, somewhere around 7,000.
Yeah. Yeah, that's fair.
Hmm.
Uh, how do you identify which sector you want to invest in? Nine stocks does not include all the sectors. So this is about which sectors actually to choose.
Yeah. So over here, I essentially am not choosing a sector. I am not even choosing a stock, right? Like I try to present and I try to articulate that I am creating an infrastructure and a philosophy. And then Claude is essentially making a decision on what sectors it has to choose. So what I'll do is I'll just try to wait, I'll just share my screen if for whoever's interested. I think you guys can see my screen, right?
Yes,
Just give
yes,
me a
yes.
thumbs up.
Mhm.
Okay, so what I'll do is I'll just open the dashboard. So over here, you can see the sector split as well, right? So it's not true that we are like Claude has chosen specific sectors. In fact, there's a 30% sector cap. So Claude is not allowed to take a position, or it's not allowed to build positions which would increase a sector's allocation to more than 30%, right? So I think, Chirag, to your question about how am I choosing the sectors, I am not choosing the sectors whatsoever. Claude is choosing the sectors. And what I have done is I've built certain guidelines and guardrails based on which Claude operates. So I hope that answers the question.
Yeah. So another question is how exactly are you getting the data you are feeding into the AI?
Yeah. So one second, I'm just gonna. Um. So I think the data part covered it, right? Like there was a slide on data. So I'll just go through that at a high level once again. So the market data from a pricing perspective, you can get it from any broker, right? Or you can get it from TradingView. Fundamentals, you can get it from a lot of different sources. Screener.in is one of the main sources. But the problem with Screener is that it's not available in an API format. Even though it's one of the most reliable websites that's available to the retail investor in India, like the format in which they upload the data is not friendly for the AI agents to consume. So that is so we use some alternate sources for that, and we have built our own data pipeline. Like I was trying to explain that we have data quality agents and verification layers, right? And we build our own dossier. Similarly, you have a lot of other sources through APIs and MCPs. I think if you just spend some time Googling, you will get access to those. And then you connect it to this particular system through APIs and MCPs, pretty much. Yeah. So, and I also use official sources, so like GST websites, RBI website, you know, BSC and NSC websites where they essentially have their announcements, circulars. So we pull that in also on a daily basis.
Okay. Next is how is the bull, bear, and devil advocate stack built on different AI stack?
So it's not built on different AI models. It's all built on Claude. But what happens is that instructions are given when we are building agents that ensure that they are working in silo, right? So clear instructions are given that this is the bull agent's job, and it is not allowed to see what the bear agent is doing, and vice versa. This is the primary reason why we do not have a bull versus bear direct argument, right? We have the devil's advocate agent, which independently reads the bull thesis and the bear thesis. So, an alternate way of explaining this would be you can think of a bull agent as like the bull agent does not even know that a bear agent exists, and vice versa, right? It's only the devil's advocate agent that reads both. And that has given a specific job scope of mediating and analyzing both the arguments. So, yeah, to summarize, it's not like we're using different AI models, right? But we are essentially creating silos within our project itself.
Okay, so the next question, I think you'll be able to answer that. So first question is, will CFA help me in becoming a quant analyst? And the second question is, what part of today's session will be covered in analyst stack?
CFA program, the best part is that it is very absorptive of new matter, whether it is the entire blockchain technology or artificial intelligence, big data, machine learning. The CFA Institute has absorbed that at aggressive pace at all three levels of the program. So obviously, it will definitely help. However, it all depends upon how much can you leverage that academic skill you learn in CFA into practicality via unstructured research, as Shreyansh put it, or via curated guidance as we do it in Analyst Stack. And that also comes to the second part of the question, which part of what Shreyansh was presenting is covered in Analyst Stack. Analyst Stack is a fundamental research program, practical fundamental research, deep diving into sectors. But this fundamental research is not taking place nowadays the way it was happening, say, 3 years, 5 years ago. It's happening at a different pace, different level altogether. People coming out of colleges used to get some job in which they will summarize con call, annual reports, this and that, and their job will start with that, and they know some Excel. But these job qualifications are gone. Okay, people don't need that apprenticeship job. People need deep dive job, those who know the stuff and can be accountable for the same. Analyst Stack is covering artificial intelligence as a separate module, module 3. Plus, it's also embedded in module 1, financial modeling, and module 2, which is deep dive sector investing. So Analyst Stack does a lot, but if you ask me, is Analyst Stack a quant-based program? No, it is not. It is not a rules-based quant-based program. It is a program which teaches you how AI can be leveraged for the purpose of doing research faster, doing research deeper, okay, and building a very good large language model, trying to ensure that you have hallucination management, trying to ensure that you are utilizing the power of AI in the most efficient but constrained and disciplined manner.
Yeah, thank you so much, sir.
So I
Uh,
think
yeah.
we should call it a day. Correct, Chirag?
Yes, sir. Yes, sir.
So thanks a
Absolutely.
lot for attending. See, ये सारे inspiration episodes होते हैं. Many a times a single episode can change the trajectory of your life. You may decide that मेरे को इसमें अपना profession बनाना है, and you become so passionate towards it, and you start unstructured or curated learning, and that's what I wish it will happen. Shreyansh, thanks a lot. Okay, for taking out time and being patient with all the queries that were taking place. And I think the audience would have definitely benefited from all the discussions which have happened. Thanks a lot.
Thank you. And once again, thanks for the team for having me. I hope, people found the session interesting. Yeah.
Bye bye.
Thank you.